I'm John Hanna for CDTV.net, and we have Greg Womack, President of Womack Investment Advisors at Edmond, Oklahoma. Thanks for joining us.
Well, thank you, John. Good to be here.
Thanks. What is the retail sales number report?
Well, retail sales fell about 0.5% in April from the March report, and it surprised, I think, a lot of analysts because of the huge drop that we had in March. Most analysts thought we'd have maybe a flat report, and because of the stimulus package too. A lot of people are getting more money in their checks from less tax withholdings and also the stimulus checks that went out. So, consumer spending, which this report really kind of entails, represents about 70% of the U.S. economy. And it's issued monthly, and then it has revisions, from the previous month. So it's a good, probably one of the key economic indicators of how the economy is doing, which is the consumer.
Okay, now what is your take on those numbers now? As an advisor, what do you think of what's happening with the economy?
Well, it appears the economy is still dragging along. There's no major turnaround at this point. It looks like consumers are conserving cash, with rising unemployment. Housing prices still down, investments are down. I think people are either using excess money just to live on, or pay down debt, or to save, and so they're not spending. And that's been about for the last year. Retail sales are down about 10% year over year.
Okay, so with regards to these numbers, as you said, it's not going to be anytime soon that we're going to get the economic turnaround we're looking for, based on these numbers?
Well, if we can remain flat, throughout here, and once the employment numbers, John, once they start picking up, that's going to create more, spendable income for people. Once the mood of the economy, once housing prices, start to bottom, and start maybe edging up, and jobs situation looks better, then people will probably feel more like spending and have the money to spend. So we probably won't see a major turnaround in consumer spending until employment starts to level out and it starts to pick up a little bit. So we're still in the midst of a slowdown, and hopefully what we've seen in the market, the stock market, on the other hand, how the stock market can react, 6 months out before the economy does recover. We may be seeing that it could be another 3 to 6 months before we see significant improvement in the economy. It's just all assumptions. I mean, one has to assume that if consumer spending is still going down or staying flat, that more than likely businesses won't be selling as much, and so consumer spending affects 70% of our economy. So until that picks up, and that probably won't pick up until we see the jobs start to pick up.
What do you look for in Are you looking at some industrial sectors right now based on these numbers?
Well, what we're looking at is if the economy is still kind of flat to still down, you want to look for areas for consistency that aren't tied to the consumer necessarily. So areas to avoid would be retailers, luxury items, things of that nature. But looking at things that are more defensive, that maybe are not as consumer driven, what I like to call have an economic moat built around them. We like to look at right now utilities. Utilities are down way off their highs, and now are starting to build a good long base in their prices and starting to move higher. And they pay some really good dividends. And so we like utilities, and a couple plays in that area would be Exelon. We like Exelon, of course, is big electric, but also in the nuclear area, and it has a nice dividend right now of about 4.3% yield. It's still about 47% off its high. If a person wants to maybe say look at utilities, but they don't want to get specific and buy individual securities, we like the exchange traded fund by the Spider Group, and it's the XLU is the symbol, and it pays about a 4.3% dividend and is about 37% off the high. And it has a mixture, a basket of utility companies, so it's a more of a diversified approach.
At least we're looking at several potential investment opportunities here for your customers. Pretty much what you tell your customers, right?
Right. We like utilities. We also like things that get governmental contracts. We look at defense and homeland security sector. That's a sector that is still getting orders. And there could be some budget cuts in certain areas of defense down the road. But for now, these stocks are still about 40% off their highs. And they do pay good dividends, but they have a good, consistent backlog of orders that aren't consumer-driven. A couple plays we like there is Raytheon, symbol is RTN, and it pays about a 2.6% yield. It's about 29% off its highs. And good, strong, solid growth, consistent earnings. And if a person here again wants to be more diversified in the homeland security defense area, you want to consider the exchange traded fund through iShares. It's ITA is the symbol, and it pays a little dividend, but you'll get exposure to the defense sector and in the homeland security sector there. And John, I think too, people need to be thinking about a year down the road, and if once the economy starts turning around. And looking a little bit better, and demand starts picking up even a little bit for energy, we're going to see much higher prices in energy once that happens, because a lot of these oil companies and gas companies have shut down production. It's crawling, and so they'll be scrambling to fill up the coffers once again, and to help supply. So we think it's good to take a little bit of funds and put into commodities right now, energy commodities and metals, even food commodities. These are areas we think, looking a year down the road, will hopefully pay big dividends as far as price increases.
Now, any other things you want to add about the overall economy in general?
Well, the economy's still struggling along, but it seems to be there's different areas, where we're seeing some signs of what they call, green shoots, of some budding, indicators that things are starting to hopefully bottom out. And you can't look at just one monthly report. You look for trends, and right now the trend is, probably still down to flat. But at some point, once we get the banks healed up and the credit crisis continues to thaw out and money starts to flow, you've got to be prepared in your portfolio for that. We've seen 25% plus increase since our March lows in the stock market. So a person can miss the boat really quick if they don't have a strategy and are invested in something. And we feel like, being somewhat defensive now, like I mentioned, but also planting some seeds in those commodity areas now could reap some big rewards down the road.
That's Greg Womack, President of Womack Investment Advisors at Edmond, Oklahoma.